And welcome everyone to another Smart Money Circle episode. With me today is Thomas Carroll, who's the founder and CEO at Ballast Rock with approximately 500 million in assets under management. Thomas, thank you so much for taking the time and welcome to the Smart Money Circle.
Thanks so much, Adam. Glad to be here.
So Thomas, I always like to begin. Can you please tell us your story and how you got to where you are today?
Absolutely. I spent the first 15 years of my career on Wall Street, 5 years at HSBC, and then just before the great financial crisis, the 2008 crisis, I jumped over to Goldman Sachs onto the structured credit desk at Goldman. Always a fun time to move, always a fun place to be. And I then spent 9 years at Goldman, leaving in 2016. I would say, though, that my shift towards a more entrepreneurial experience, I'm sure, like many others out there, was non-linear and was took multiple steps. In fact, the first step I took on my entrepreneurial journey was really at Goldman and before that at HSBC, where my role had been within those firms to help build new products and build new businesses. So that in and of itself was fairly entrepreneurial. And then my first truly independent entrepreneurial experience was helping to support my wife in starting a retail business that she started while I was working at Goldman. And I was working full time at GS and then at night coming home and trying to help her to build her business. But I would say that really gave me a huge boost of confidence to go try my own thing. So an old colleague called me in late 2015, and in early 2016, I then left Goldman and joined my old colleague in starting a business at that time. And then about a year or more like 2 years later, I then turned around and founded my own firm, Ballast Rock, and we've been growing ever since then. So my journey has been windy towards where we are today.
I love that. So I know you have multiple businesses under the Ballast Rock umbrella, so please let us know a little about what you do.
Absolutely. I think in the simplest terms, we help people that have worked hard to create wealth, to protect that wealth, and to have that wealth work for them to grow over time. More specifically, we have three core areas of the business. We have a FINRA regulated broker dealer, for which I am the securities principal, called Ballast Rock Capital. We have a boutique asset management firm called Ballast Rock Asset Management that has multiple different investment strategies within it that I'm happy to talk to. And then we have our SEC regulated RIA, Registered Investment Advisory Firm, that I helped set up and that I was the first client of, but actually has its own C-suite and on a day-to-day basis is run by that separate and independent team. But again, everything we do from our broker-dealer to our boutique asset management firm to our wealth advisory firm is really to further that key core vision of helping those that have created wealth to protect that wealth and grow that wealth over time.
Gotcha. Makes perfect sense. And also you have a foundation, so I'd like to give some room there to share about that because that's dear to my heart too. I have my Happy Face Project Foundation, so please let us know about the Ballast Rock Foundation and what you do.
Absolutely. Yes. We set up the Ballast Rock Foundation a few years ago, and the genesis was to give back naturally, but specifically within the areas of contributing to adjusting and bettering educational unemployment, educational inequality and housing inequality. One of the core strategies that we've built Ballast Rock Asset Management around has been developing and helping to improve workforce multifamily housing, specifically in the Southeast. And so housing inequality is something that we see on a daily basis, and the foundation enables the leadership team and enables our investors and clients to help improve and offset those housing inequalities and those educational inequalities that in the long term prevent people from breaking out of poverty cycle. So housing inequality and helping to eradicate housing inequality helps us to manage a short-term need, whereas educational inequality and helping to address educational inequality, we think helps to address a long-term need and the necessity and the ability to break out of the poverty cycle.
Oh, very nice. Well, thank you very much for your efforts in doing that because that's fantastic. Let's talk about the business again. So you have an asset management firm, you've got a venture capital firm, you've got a broker-dealer firm, and a private wealth firm in the financial services space. I love that you have those verticals. Let's talk about the investment strategy. Are you more fundamentally oriented, technically oriented, asset allocation, planning? Please let us know anywhere you want to go with that.
Well, naturally, it depends on the business. So I would say, let's start, for example, with our private wealth advisory group. Our private wealth group starts with financial planning because, frankly, if you don't do a financial plan, if you don't adequately understand your client base, you're not able to accurately advise them. So leading with financial planning is critical because it's part of the know your customer, know your client process. Knowing their risks, knowing their liquidity constraints, knowing life events that may be coming down the pike, all of those things come out during the financial planning process. We then believe, though, in what we call the 4 pillars of private market investing. We are a firm that in our DNA has private market investing as a core component of our DNA. We were founded originally as an asset management firm focused on real estate, venture capital, and soon to be private credit as core components of what we do and core strategies. So the data shows that private market investing, a subcomponent of alternatives more broadly, generally leads to higher returns, lower volatility, as long as an investor can take illiquidity as a component of the way that they invest. So all of our funds and a lot of our financial advice, where appropriate for the client from within our RIA, focuses on helping to truly diversify an investor's portfolio. So when I talk about true diversification, it's the idea that of corporate GDP, the S&P represents about 12% of the US's corporate GDP. So there's another 88% of US corporate GDP that you can't invest in directly through public stocks and public bonds. And so to participate and truly diversify your portfolio, it is critical to have some component of those 4 pillars of private markets: private equity, venture capital, private credit, and private real estate within your portfolio, and truly diversify in that way. So again, leading on the RIA side, we lead with financial planning, and then we create portfolios that help investors to truly diversify their portfolios across both public and private markets. And then within our asset management division, the funds that we focus on generally have a value add component. They're all within those 4 pillars of private markets, and they have a value add component. They have a component where we can roll up our sleeves as a team, do the work, and better assure our investors that we can consistently create returns. So I would say more on the fundamental side than on the technical side. But fundamentally add value to that piece of that real estate, to that business, in an effort to reduce risk. Nobody can guarantee returns. That'd be preposterous to suggest that you can. But the way that we can best protect and be a fiduciary for our investors' capital is to do the work that actually directly contributes to the success of the business. And that's what we do across our real estate division, across our venture capital division. That's really what enables us to reduce risk and hopefully achieve the most attractive risk-adjusted returns.
I love that. So, Tom, can you tell us the four pillars again, just so people can write them down in case they missed it?
Sure. So within alternatives as a huge bucket, we view there are four pillars of private market investing: venture capital, private real estate, private credit, and private equity. That was not listed in any size order or priority order or return order or anything like that. That's just me throwing those four out there. And here at Ballast Rock Asset Management, our boutique asset management firm, we currently cover two of those pillars. We have a strong backbone in real estate, specifically in workforce multifamily value add real estate in the Southeast, and venture capital. We have both an early stage and a growth stage VC fund in partnership with a VC specialized firm. We are about to launch our first private credit fund in the month or so to come. So very excited to have that ahead of us. And hopefully in the years to come, we'll also work on something in private equity. We have worked on specific private equity projects, but we have not as of yet launched a private equity fund. But those are the four core pillars within the much larger grouping of alternatives that includes all sorts of stuff that, in my opinion, doesn't necessarily directly generate value or inherently generate value within that larger alternative space. I kind of break things apart into those things that are clearly directly generating income, revenue, value, growth, jobs, opportunities, and those things that are kind of a punt. Right? You're just a directional view and you're hoping that somebody buys something after you bought it. But that inherently doesn't necessarily generate any value. And that's a big segment of the alternative space that we are not so keen on, I would say, as an organization.
And then do you have traditional investments as well into equities? And if so, how does that work?
Our RIA, our registered investment advisory firm, Ballast Rock Private Wealth, absolutely yes. The firm has a chief investment officer that builds holistic portfolios on behalf of investors that include a variety of different strategies. I do not work on that side of the business on a day-to-day basis. I was the first client. I have complete confidence in the team that have built my own personal portfolio. But that's not something that I'm ideally qualified to answer.
No, that's perfect. I was just curious if that's part of the offering. So if I understand you properly, clients come to you, you give them the financial plan, and then based on that, you allocate either to equities or to the four pillars in the alternative space that you just shared, or figure out what's best for them on a client by client basis. Is that a good summary of what you shared?
Absolutely. That's what our wealth advisory team do on a daily basis. And I would say in the bulk of situations, they're often allocating 90% or even 100% in some cases to public markets. That may be equities, that may be public debt, that may be a variety of different things. It really does depend on the client. We also have clients that reach out to us and ask exclusively for us to manage an alternatives sleeve for them. So it very much depends. Again, that's on our wealth advisory side. And then on our actual, with our own internal Ballast Rock Asset Management funds, all of those funds have very dedicated specific strategies: real estate, venture capital, private credit. Those are our own in-house funds, completely independent of our wealth advisory group. Our wealth advisory group is open architecture. They're in no way required to invest. In fact, we have to go through their investment committee to get our own funds approved alongside everybody else's funds for our wealth advisory group. So it really is an entirely independent organization, but there's some DNA that we share.
Wonderful. So thank you for sharing. Let's move forward now to risk management and then shift the gear to some timeless lessons. But let's talk about risk first. How do you handle risk, and what are some timeless mistakes you see people make with respect to risk management?
I think, to me, let's talk about leadership risk, because really my role in this organization is to lead the firm rather than be a product expert in anything on a day-to-day basis. I do have a risk management background. I ran a trading desk at Goldman before going out on my own and building the team that we built here at Ballast Rock. But one of the things that I've learned in my career, both on Wall Street and now running my own firm, has been aligning interests. When you have a very highly intelligent group of people and they have incorrectly aligned interests, they will inevitably find a way to work around the best processes and management structures that you might have. And that is a lesson that I learned in the global financial crisis, and in fact, in the lead up to that crisis. It was very apparent that you had people that had extremely short-term incentives, and they were misaligned with the long-term risk management needs of the firm. So I would say alignment of your team is the main risk management tool that you can have as an organization.
I love that alignment of the team. That's really, really powerful, because you're looking at it from a holistic approach and more of a leadership approach than specifically one. You look at the forest, not just the trees or the leaves on the trees, if I understand you correctly.
Absolutely. And I have an extremely talented team that look at the trees every day and that can tell you which leaf is about to fall and how to manage that fall. But my job is to make sure that I've picked the right trees and that those trees have an interconnected root between them, so that they understand the success of the forest is their own success.
Understood. Love it. Okay, let's talk about timeless lessons. What are some timeless lessons that you'd like to share with the audience?
Well, I'm going to start with a few practical tips and then perhaps step back and go a bit bigger picture. On the practical tips, in particular, these are, I would say, leadership timeless lessons, but probably applicable to other things as well. Run a super tight calendar. Organization and time management give you leverage. So, the better organized you are, the better you can manage your calendar, the more you can achieve. If you're sloppy about it, you're going to spend a lot more time doing the same things, and reduce distractions wherever you possibly can. I would say also leverage your team. That ends up being vital in allowing leadership to succeed. Another thing, and I think this really differs by industry, but somebody told me this, somebody I worked for at Goldman told me this many years ago, and I think he's absolutely right. In finance, never have more than 8 direct reports. You simply cannot do all the things that you need to do for your team, for your reports, if you have too many of them.
Right.
So if you have more than 8 direct reports, you need to find a way to have those reports report into somebody else so that you diminish the number of reports, because your team are your leverage. And so being able to develop your team adequately requires time and energy, and having more than 8 direct reports simply makes that impossible. You won't be able to deliver what they need and give them the attention they need. So reduce your reports, I think is a really important practical tip. One of the bigger picture cultural points that I also learned on Wall Street and that we've applied here in our corporate culture at Ballast Rock is that work is the exchange of labor for compensation. Fine, we all know that. But in particular, at a junior level, work is often an exchange of labor for knowledge, development, and growth. And so, look, work is called work. It's not called play for a reason. And particularly in a fast-paced environment, one doesn't have time to explain every detail of every requested task. But at a quiet moment, always make sure to explain the context of the work that an individual has been asked to do, the task that they've been asked to do, in the context of the project or in the context of the larger organization. Because if people understand the context of the work, it becomes more meaningful, it becomes less of a daily grind, and it also enables that individual to see if there isn't a way to improve that task or that process in the broader context of the organization. If they don't understand the context, they can never improve that task and improve upon that task. And an organization moves forward based on the whole team improving a series of existing tasks slowly and steadily and consistently over time. So I think it's critical that your team know the context of what they're doing at all times.
Yeah, that's really powerful. I love that. Okay, how about the other side? What are some timeless mistakes that you've learned that you'd like to share with the audience?
Well, in broad terms, things like a lack of clear vision are leadership mistakes, that I think people regularly make. Micromanaging is a big one that I find really painful to deal with and have found painful to deal with as an individual. So I try really hard to resist doing that. Avoiding difficult conversations. As a leader, I hate difficult conversations. I'm a non-confrontational person, but it is at the end of the day part of my job. And so it's something that a leader can't avoid. I think leaders often fail to listen, and leadership is spending a leader is spending their entire time really building teams and ultimately compensating those teams. So why would you do all that work and pay all that money not to listen to your team? You are never going to be the expert at everything. Surround yourself with people that are smarter than you, that know more than you, and listen to them. Never take credit for something that others do or blame them for that failure. At the end of the day, a leader has to take responsibility, not credit. Don't let your ego get in the way, and always keep in the back of your mind workplace culture and trying to maintain that workplace culture. I have a few examples of specific experiences that I've had working for different managers during my career that I thought might highlight some of these big picture points.
Well, sorry, Thomas, let me just jump in for a second. Since you're speaking about
Of course.
leadership, I'd like to ask you to expand and I'm going to ask you the next question was what makes a great leader and what's some advice you have around leadership? So if you want to go in that direction, by all means, please feel free to continue.
Sure, I'm happy to do that. And I'd say what makes a great leader is leading with passion, leading with purpose. People want to follow somebody that they're inspired by, somebody that's energetic and passionate. A CEO at the end of the day has to be the number one salesperson for their business. So, but it's important not only that you can sell externally, but that you can effectively lead with purpose and passion, which in many ways is selling internally. But having clear vision and a strong sense of purpose is, in my opinion, what drives teams forward and drives success. I really think you have to lead by example. And I use the phrase lead with work quite a lot. Leading with work means doing the work first, even if there isn't a clear result of that work that's obvious when you're doing it. But leading with work has so many positives that come as a result of that. At Ballast Rock, we've always led with work, and I think it enables everyone to have a really good understanding of what we do as an organization, and that's a really important part of leading by example. I think we have to, as leaders, listen more than we speak. We have to do the opposite of micromanaging. We have to empower those people that we bring into our team. And we have to make decisions with courage and with data. In my experience, leaders often fall onto one of two sides of this problem. They're either indecisive, which is problematic, dangerous, maybe a constant reliant on a committee-based decision-making approach, which is usually not particularly successful over time. But then on the flip side, perhaps they let their egos get in the way and they make decisions without the appropriate data or adoption from their broader team. So really backing up good leadership intuition with data and feedback, but on a timely basis to make bold decisions, I think makes a huge difference in the way that you lead an organization. And I'd say that the last point I'd highlight is to never stop learning. Every single day, I love what I do because I get to learn something new, whether it's new about a client, new about a product, new about an asset class, new about a market, or new about leadership. As I develop as a leader in a continuous journey, I think being a lifelong learner, which is a well-trodden phrase at this point, but a lifelong learner is really important in leading any organization. So, some of the things that I've seen as an employee working for others that don't necessarily fall into those great leadership results. I would say one example was a leader that I worked with during a period of global turmoil, where the chap walked into the room after a very swift change of management right above me and said that very explicitly, he said, "You are here to get me paid and promoted. And if you succeed in getting me paid and promoted, I will return the favor and pay and promote you." And though there is some truth to that outlook, I think it fundamentally misreads the nature of people's willingness to work, and it makes it entirely transactional. And so it's really hard to build a team that's always what I call thinking in the shower. I have my best thoughts and kind of my clearest thoughts and visions in moments of quiet. And the shower happens to be a moment of quiet for me when the rest of the world is drowned out. But you need your entire team having those thinking in the shower moments, those moments of quiet where they can think about the firm and about their product, about their business, about their team. And if things are entirely transactional, you promote, you get me paid and promoted, you contribute to my success and I'll contribute to your success, I think you drown out those thinking in the shower moments. So that was an example of a poor quality communication style, and I think also a lack of understanding of culture that has educated me in the way that I've designed the culture of Ballast Rock. Um, another example, CEOs generally tend to be at the center of information flows, and business leaders tend to be at the center of information flows from across the organization. If they're not at the center of those information flows, they need to make sure that they are. But one of the chaps that I worked with over the years, he put himself at the center of all information flows. And then I think partly out of ego, he used that centralized information flow to punish everyone else around him that was that didn't have that same level of information. I think a leader has to take the opposite approach and resist that urge to amplify your own ego to look smart, but instead take the approach that you're at the center of information, so therefore you need to disseminate relevant information across the firm. Make sure that others that don't know the challenge that you've had to your left to make sure that they know on your right how to handle that challenge by disseminating that information. I'd say a final leadership point that I've learned over the years that I find particularly challenging to deal with are idea fairies, what I call idea fairies. People that have brilliant ideas, or what they think are brilliant ideas, but because they have so little understanding of the weeds of their own business, they don't fully appreciate what it takes to implement that idea or even research that idea. I find that idea fairies can be dangerous in an organization. You have to have the right balance of creativity, but also understanding of the weeds of the business, of the industry, of your team, of your capabilities, of your resources, to be able to implement those ideas, or it can be very expensive.
Yeah, I love that. I like that a lot. The idea of fairies, everyone's got a great idea, but they can't execute. Okay, final question for you today, Thomas. Please let us know the best advice you'd like to give the audience or your 30-year-old self.
I would say for my 30-year-old self, view your employee experience as an education rather than as the destination, and don't get caught up in the ins and outs of corporate intrigue. Rather view it as part of the journey towards the next stage in your growth. It was certainly stressful when I was 30. The seat that I was sitting in, the corporate intrigue that was whizzing around my head, both within the firm and globally. But view it as part of the journey if you're able to step back. That's always the challenge, though.
Got it. Well, Thomas has been absolutely fantastic. I'm going to have links to your website and your foundation below in the description. Thank you very much for coming on the show, and hopefully we'll have you on again soon.
Would love that. Thank you so much, Adam. Appreciate your time.